So it's over. China's real estate is done. They must inject stimulus or the Chinese economy will collapse. And we are seeing crazy headlines like this every single day. The West is calling for the end of China unless they take decisive action by throwing money at the problem. There's still this misguided fantasy that China will rescue the world, but here's the truth. China isn't going to play ball and destroy their economy to save America. In our lead story today, China's worsening economic slowdown is rippling across the globe. This is freaking out the world because China was meant to drive a third of global growth this year, and the Chinese slowdown is making everyone run in circles. Policymakers are bracing for a hit to their economies because China's imports of everything are dropping, and we have President Biden calling China's economy a ticking time bomb. Now, this is the big fear that the Western economies face. China's imports are slowing, which is bad news for Europe and America. And if the real estate sector crashes, the fear is that the Chinese consumer will collapse as well. Now, the EU is in the worst position because China is a huge trading partner. Chinese consumers, they love their German-made cars and traveling to Europe. Everyone talks about de-risking, but no one wants to decouple from Chinese money. And looking at China's tourism, we can see an absolute crash in outbound tourists. It has crashed from nearly 40 million a quarter to just over 10 million, which is a massive drop in consumption. The locals aren't flying overseas anymore. They are staying in China, which is a big country with 23 provinces and hundreds of cities. There's a ton to do at home without leaving the borders. That's why we have headlines literally begging China to print money to stimulate the economy. China's market rescue is failing as she holds back on stimulus. And to no one's surprise, foreign investors are disappointed by the lack of pro-growth measures. They want the Chinese government to save the property developers to reverse the slowdown. But here's the truth. China isn't going to bow to public pressure. This is China. This is a planned economy, and they don't care what others think they should do. China under President Xi is a whole different animal. They are moving towards a more diversified economy. Real estate accounts for 30% of China's GDP currently, which is insanely high. And he's taking this property crisis as the perfect opportunity to burn the developers to the ground and rebuild a stronger economy from the ground up. And the fear is building in the property market. Now, we have mentioned before that China will throw the developers into the deep end. They aren't putting on the red cape to save the day. Remember Evergrande? Well, they are back in the headlines. Evergrande shares plunged 87% in Hong Kong after trading resumed. And it's so bad that the company is now a penny stock. The price has fallen by a crazy 99% since the peak in October. And this is a clear warning sign that if you're a speculator in property, whether it is in real estate itself or the stock market, you are now on your own. And this is something that the world needs to accept. There will be some contagion fallout from the Evergrande saga. If you're a creditor or stockholder of these developers, there won't be any bailout coming for you. You're kind of left holding the bag. But the bloodbath isn't going to stop. China has cracked down on their booming real estate industry to make homes more affordable. However, this comes at a cost, and the next victim could very well be Country Garden, the distressed developer. They are now asking for more time to repay their bond that is maturing next week. But here's the catch. It isn't a US dollar bond, but a bond denominated in Chinese yuan. And this tells us that the developers have a cash crunch, and if they can't pay back the bond, local investors in China will be hit. This fear is triggering everyone to back China to inject stimulus. You must print money, you must save the developers, or else the entire real estate sector will go under. And here's why. Now, if China's real estate collapses, this will reduce consumption throughout the country. 70% of household wealth in China lies in real estate. And if your home price suddenly drops by 10, 20, or even 30%, you will immediately feel poorer. Even though it's just a psychological hit, right? Even if it's just in your head, you won't want to head out and spend money. It's this collapsing demand that is terrifying the world, and that could trigger a global recession. According to the IMF, when China's GDP grows by 1%, other countries around the world also rises by 0.3%. China's recovery is like a rising tide that lifts all boats. And normally, that would be right, but they aren't going to save their property sector this time to artificially boost their GDP. China has this one chance to right the wrongs in their property sector. And this is a controlled implosion by the Chinese government. And if they don't go all the way now and they start pumping money now, then China's economy will face this crisis again, and again. And this is where we need to travel back in time to understand the big mistakes China made with their real estate. Every bubble is always engineered by government policy, whether it is in America or China. Now, in 2008, after the financial crisis, it wasn't just the United States that inflated its balance sheet. We know the infamous Wall Street bailout that cost America around $800 billion. And that was a wrong move that just kicked the can down the road. It made Wall Street even more powerful than ever, and they never really learned their lesson. But China did their own stimulus back in '08 as well. They approved a 4 trillion yuan injection, which is equivalent to 580 billion US dollars. That is a ton of money, and yes, a big chunk flowed into real estate. And knowing what we know today, it was obviously a mistake that started a property bubble. And that was the genesis of the fire President Xi is trying to put out. And listen to this, credit ceilings for commercial banks are to be abolished in the hope of channeling more capital to small enterprises, rural areas, and priority projects, probably means real estate. In other words, banks were encouraged to lend money like crazy to inflate the property bubble. The banks were told to lend more money to developers to build more homes and buildings, and boy, did they start building. Then you throw in the situation of China's shadow banks, and you have a recipe for developers to go crazy with all the borrowing. Shadow banks are basically lenders that act like actual banks but without any oversight. And in China's case, they go out to the market and borrow money by selling bonds. And in many cases, these bonds were sold to the investors in United States, including Wall Street. And one of the shadow banks, Zhongrong, invested 11% of its assets directly into real estate, helping to finance the developers. Now they are missing their bond payments, and that isn't good. The developers were going around the system to get financing. When the government finally cracked down on this shadow bank lending, it virtually destroyed the developers' balance sheets. Now they can't borrow money from Peter to pay Paul, they can't get new money to service the previous bond payments. And that's why we are having the real estate crisis today. The developers are squeezed, and the Chinese government is not coming to rescue them. So bondholders, both foreign and domestic, are on the hook. And that's why there's this outcry for China to stimulate. They want President Xi to pump money to save real estate and the Chinese economy in general. But that is the easy way out, and China is resisting that. It's a pipe dream that Xi Jinping will force feed the economy with debt again. But he has to do something, right? We can see this big drop in Chinese retail sales growth. It has gone from over 18% in April down to 2.5% in July. Obviously, the government has to control that and prevent it from hitting negative, or else the deflation spiral could happen. So what is China doing to prevent an implosion? They have to walk a tightrope. You must do something, but you can't directly inject money into the system. And a big move is to give developers a type of debt relief. They want their banks to extend outstanding loans for the developers, and that means giving a 1-year repayment extension for loans due by the end of 2024. Now, the aim isn't to save speculators or the big developers, but to simply ensure the homes that were promised will be built. So it's more about finishing the current projects to save the man on the street. And this is important because China is running on social cohesion and common prosperity. And this is very different from pure capitalism. The focus here is to satisfy the people. And if the homes promised aren't delivered, you'll likely see chaos breaking out. And remember what China is aiming for, a controlled demolition of the real estate sector without imploding the whole country. Property prices needs to come down so that people can afford homes, right? But they also don't want to destroy people's wealth. That's why headlines like this only tell one part of the story. President Xi is holding back on stimulus. That is 100% true because the rescue isn't for developers or speculators. Besides, even if you inject the banks full of capital, that doesn't guarantee that lending will happen. According to Morgan Stanley's former chief analyst, the government isn't giving them money because the funds simply won't flow out. Banks, they know that the risk is too high, especially if interest rates start to go up. You can inject all the money in the world that you want, but if the banks feel that developers are going under, they simply won't lend. If you see the Titanic sinking, will you climb on board for $1 million? You probably won't. So the deleveraging of China's real estate is real, and China only has enough ammunition to save its own economy. They will cushion the impact for their own local people, but not the global economy. And make no mistake, China's growth will slow down, but it isn't on the verge of collapse. Their GDP has been rising over the past few quarters. Q1 GDP came in at 4.5%, while Q2 is at 6.3%. Now, I believe Q3 could in fact dip below 5%, but it's not a big tragedy. We need to compare it accurately with the rest of the world. America's GDP growth has been flat with the last 3 quarters averaging 2.5% at best. So the US isn't exactly booming either. GDP is in a positive territory, but it is propped up by tons of deficit spending. And if we look at Europe, it is in even worse shape. The EU's GDP growth is on a steady decline. It has gone from 5.6% in 2022, dropping all the way down to 0.5% in Q2 this year. The Eurozone is essentially on the edge of financial oblivion, economic Armageddon, and that's why there's this big call for China to stimulate. If China buys more stuff from Europe, they might save their GDP from heading down south. At least that is the hope. But if we throw in the inflation figures, you quickly see a different story. And let's lay out the CPI numbers of America, the EU, and China together. And we immediately see that inflation in the West is far higher than in China, with the EU coming in at 5.5%. And this is distorting the GDP numbers. Higher inflation means higher prices, which boosts GDP growth. In China's case, their GDP growth is near 5% on average, despite being in deflation. Their July CPI comes in at negative 0.3%, which means prices are actually dropping, which should drag down their growth. It should be obvious that China's real GDP growth is actually quite strong. Their economy is still expanding while prices are dropping, which is kind of good news for people on the street. Their purchasing power has actually increased for people in Beijing. So, in a sense, only China has room to stimulate its economy without entering an immediate inflation crisis. America can't lower interest rates or print money. The ECB also can't QE and inject stimulus as well. They will cause their inflation to spike back up and rates to go even higher, and we'll see another banking crisis on Wall Street again. And this means China has to choose. Do they solve the immediate property crisis now and save the world? Or do they restructure their own economy and go through the pain today? But here's the catch, they can't do both. If Beijing decides to QE their way out of this one, they will zombify their property sector. Then in a few years, I'll be really creating videos about the collapse of China and how real estate took them down. There'll be thumbnails of fire with the Chinese flag at the back and doom and gloom written in the title. And that's what's going to happen. So understand what China is doing. They're deliberately allowing the real estate sector to deflate. It might very well trigger a crash in home prices, but they don't really have a choice, right? You either treat the problem today or face a bigger problem 10 times the size tomorrow. The only playable cards lies with China. And that's why we have America's head of commerce, Raimondo, traveling all the way to Beijing. They know decoupling is crazy and the global economy can't endure any more of this insanity. But I want to tie this back to a speech made by President Xi last year. He stuck to his script on economic development and common prosperity, and this gives us a big clue on how China will respond to their real estate crisis. And during his address about the property sector, his slogan of housing is for living and not for speculation came back again. And this suggests that regulation isn't going to go away. They likely won't ease their three red lines policy because you'll only feel even more speculation. But here's what this means. China's consumption will probably keep heading down because there's still a contagion effect coming. The developers still owe a ton of money to small businesses and suppliers which might never get paid. But Xi Jinping won't want to create another property bubble just to ramp up GDP. There isn't much point. If you inject stimulus today, you'll just create a bigger monster down the road. And like what Ray Dalio said, China needs to engineer a beautiful deleveraging, and the base case is for Beijing to play their cards conservatively. They will pull on all levers to slow down the crash, but I'll be in big shock if China injects stimulus directly. So let me know what you think. Can China pull off a soft landing for their property sector, or will their real estate crash and take down the global economy? Let me know what you think in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.